In real estate, there is this mysterious thing called closing costs. Every transaction has them. It's something every buyer and seller have to deal with. So, what are these things called closing costs? So, in the video today, I'm going to explain everything that a potential buyer or seller needs to know about them. And stick with me to the end because I am going to share some interesting closing cost facts and give you access to some free resources that will help you to better understand them. So let's get started. What are closing costs? So closing costs are expenses associated with a real estate transaction that are not directly related to the purchase price. They're fees and things that you need to spend in order to get the sale closed. Hence why they're called closing costs. So what's typically included in a closing cost? So you can see things like government recording fees. Sometimes they call them tax stamps, appraisal fees. If the lender hasn't had you pay for the appraisal ahead of time before, when it was ordered, the cost of your credit report, lender origination fees, what the title services are, your title insurance, the settlement fee, which is what the closing person charges to gather the paperwork and put it all together so you can close, survey fees, underwriting fees, prepaid interest for your mortgage, creating your escrow account as a mortgage. So as you can probably guess, most of the closing costs are on the buyer's side of the equation. The seller has very few closing costs. In most cases, they'll have a settlement fee and maybe some other little things that their title company might charge for them, like a doc prep fee or a courier fee or something like that. So, but most of the closing costs cover the buyer's side of the transaction. So who pays for closing costs, the buyer or the seller? Well, as with many things in real estate, that is completely negotiable. When the buyer makes their offer on that seller's property, that is something that is put into the contract where both sides then negotiate it and decide who's going to pay them. So if you're a buyer who's looking to make an offer on a property, there's a few things that go into determining should you ask for closing costs or should you not. So let's start buyer's market versus seller's market. If there are many more houses for sale than there are buyers to buy them, that's a buyer's market. That means buyers have more leverage. It means houses are sitting on the market longer, and sellers are much more open to doing what they need to in order to get their house under contract. So if it is a buyer's market, the buyer has a really good chance of asking for and getting the seller to pay those closing costs. However, let's flip it around and say it's a seller's market. That means there are many more buyers than there are homes for sale. In that type of market, typically the typical seller is going to have a lot more demand for their house. They're going to have more buyers interested in their house. Hence, they're going to have more leverage in the transaction and in the negotiations. In those situations, that seller is likely going to try to negotiate so the buyer has to pay their own closing costs out of pocket. So keep in mind, if you're a buyer and you are going to closing and the seller is not paying your closing costs for you, those closing costs are an additional amount of cash you will have to bring to the closing in addition to whatever you're bringing for your down payment. So that's something important to know. Another thing that buyers need to consider when asking for closing costs, how much cash do they have available to put towards the purchase of their house? So if you're a buyer and you only have several $1,000s of cash available, your closing costs, you might need to put all of that towards your closing costs, and you might need to see if you can get a loan that's with zero down or with a smaller down payment. And if the cash that you have is going to be used up on that down payment, you may have no choice but to ask that seller for those closing costs. So let's say that the seller is going to pay the closing costs. A lot of times you will hear that referred to as seller concessions. So closing costs and seller concessions, they're basically the same thing, only seller concessions means the seller is paying them on behalf of the buyer. So let me just give a caveat to sellers. So if you're a seller, your house, either you are in a buyer's market or your house has been on the market for a while, and you get an offer and that buyer is asking you to pay their closing costs, I encourage you not to get caught up in the idea that you're paying something for that buyer that's technically that buyer's responsibility or required for that buyer to close their loan and close on their purchase. Instead, as a seller, if you've got one offer in hand and they're asking for closing costs, your focus should be on your bottom line. Because like we just talked about, that buyer could be in a position where they can't buy that house if they have to pay the closing costs out of pocket themselves. The benefit, the advantage that the seller has over that buyer is if they're paying the closing costs on the buyer's behalf, it's not actually coming out of your pocket before the transaction. It is coming out of your sale proceeds at the closing table. So it's no money out of your pocket beforehand, which means it's basically accounting. The buyer could offer you less money for the house and pay their own closing costs, or they can offer you more money for the house and ask you to pay them for them. So there's things that need to be taken into consideration, like whether or not the house will appraise, that sort of thing. But if you're negotiating with a single person, or if you're looking at multiple offers and that buyer is asking for those closing costs, a seller needs to consider what is the bottom line amount they will get out of the sale and put into their pocket after all fees have been paid. And that's really one of the best ways for a seller to look at things. All right, so how much are the typical closing costs? Well, it runs the gamut. It can be anywhere from a few $1,000s up to $10,000, $20,000, $30,000 or more. It depends on lots of factors. It depends on the type of loan you're getting. It depends on the lender possibly. It depends on the price of the house. It depends on many, many factors. All right, some key things to know about closing costs. If you are getting a mortgage, you're going to have higher closing costs than if you're not. For example, one of the big parts of a mortgage is your escrow account. So your escrow account is where your money will be held by that lender. You'll have a portion of your monthly payment that would cover taxes, property taxes, and insurance every month. And that additional money you're paying above and beyond your principal and interest each month, that's going to go into an escrow account that your lender manages. So your lender is going to manage that escrow account, and then each month they're going to collect that money. And then when taxes are due or when homeowners insurance is due, they're going to go ahead and pay that on your behalf out of that escrow account. So when you have a mortgage with an escrow account and your lender is setting up that mortgage escrow account, they're going to need to collect funds to cover a certain amount of taxes or insurance that varies depending on where you are in the year in terms of when taxes are due. So that's going to cause your closing costs to be higher. Another part of this is if you are closing on your sale early in the month versus late in the month, your closing costs will be higher if you're getting a mortgage early in the month. That is because for the month that you are closing in, you have to pay interest from closing date through the end of the month. So obviously, if you close early, like the first or the second or the third, you're going to have a bigger chunk of interest that's due for that month. If you close late in the month, the 27th, 28th, you're going to have a smaller amount of interest. Well, that can have a big impact on the amount of closing costs that you're going to need in order to close on that purchase. It's also specific to the home you're buying. If the taxes or insurance are higher or lower on one home to the next, that's going to impact your closing costs because that escrow account that's getting set up will be impacted by the amount of taxes and insurance that will be due. So talk it over with your lender, talk it over with your realtor. When you're getting ready to make an offer, have your lender tell you based on that specific house you're making the offer on and what closing date you're shooting for, what to expect from those closing costs. All right, so I promised you some interesting facts about closing costs. Here's something that most people don't know. If the seller is paying the closing costs, if you're the buyer and the seller is paying closing costs for you, as a buyer, you can apply those funds to anything the lender will allow you to apply them to. So some things that could be included. You could buy down your interest rate to lower your monthly payment. You can pay off a car loan or a credit card or other debt if that's required for your loan approval. I've seen people use closing costs to pay for moving expenses. I've even seen back during the Great Recession when it was a horrible market for sellers, and very few buyers and lots of houses on the market, I saw a seller who paid the tuition for a semester for the buyer's child because that was the way they got the buyer to agree to move forward with the purchase of that house. So you're probably not going to get many sellers to pay your kids' tuition, but if you get creative and have a dialogue with your lender, you keep in mind that these types of things can happen. You can have creative things paid for with those closing costs. However, another thing to keep in mind is that type of creativity and that additional expense that a seller pays on your behalf as the buyer, that only works in buyer's markets or when the house you're making an offer on has been on the market for a long time. All right, so we also have some resources at hafnerrealestate.com/resources. Got some details about closing costs and all kinds of other useful information, so go check that out. And follow us on social media and subscribe to our YouTube channel for more awesome real estate content. If you are watching this on YouTube right now, please subscribe and ring the notification bell so you make sure you never miss any of our videos. And finally, if you're thinking of making a move to, from, or within Murfreesboro, Middle Tennessee, or if you just have questions about the market or real estate in general, please send us a call, text, or email. Our company mission is to help people just like you to achieve their real estate goals, and I promise we'll make the journey as fun and stress-free as possible. Thanks a lot for joining us.